In January 2026, gold shattered all expectations, surging past $4,800 an ounce, a level once considered impossible. The official story pins the blame on a sudden geopolitical crisis over Greenland, but the numbers are too extreme, suggesting something else is moving just beneath the surface. An alternative theory is gaining traction in quiet financial circles, that this isn't a natural price surge, but a result of deliberate pressure on the dollar's role. The claim is that powerful forces are intentionally inflating a gold bubble, only to rotate the profits into an entirely new, crypto-based financial system. It's an extraordinary claim, but with the U.S. national debt soaring past $38 trillion, the central question can't be ignored. Is this just market panic, or are we witnessing the first move in a planned financial reset? In this investigation, we separate fact from speculation and follow the money. To evaluate the theory, you first have to understand the official story. And it all starts with the Greenland Gambit. On January 17, 2026, President Trump threatened 8 major European nations with escalating tariffs unless they negotiated a U.S. takeover of Greenland. European leaders decried it as a grave risk to the transatlantic relationship, with France activating its anti-coercion instrument, a formal defense against economic aggression. The market's reaction was immediate and severe. This degree of uncertainty between the world's largest economic blocs sent the US dollar into a significant decline. As the dollar falls, gold becomes cheaper for foreign buyers, and investors flee paper assets for the traditional safety of physical gold. A classic flight to safety. So, is a trade spat enough to justify this level of market chaos? The official story says yes, especially when you add 2 other forces into the mix. First, the Federal Reserve. Markets have priced in rate cuts for mid-2026, and lower rates are rocket fuel for gold. With Fed Chair Jerome Powell holding rates steady for now, that looming uncertainty only adds to gold's appeal. Second is brute force demand. Throughout 2025, central banks were already on a historic gold buying spree. The metal had already gained 70% that year, setting a new record of $4,600 on January 12, 2026. The stage was already set for an explosion. So there you have the official story. A perfect storm of geopolitics, a weakening dollar, and a massive institutional buying frenzy. In this view, gold isn't the aggressor. It's simply a shield against government-created instability. But the sheer extremity of the numbers forces us to ask, is the official story really enough? As of mid-January 2026, gold futures are hovering at $4,880 an ounce, and forecasters are scrambling to upgrade their targets into the $6,100 to $6,700 range. But as stunning as gold's run has been, it's been completely overshadowed by silver. In 2025, silver gained nearly 150%, fueled by both monetary demand and an explosion in industrial use for solar panels, EVs, and AI. Some analysts now project silver could test prices as high as $175 to $220 per ounce by the end of 2026. Movements this wild are rarely about just one thing. They often signal a deeper instability. A trade spat over Greenland feels like a trigger, not the fundamental cause. And that brings us to the one number that underpins this entire event, the U.S. national debt. As of January 2026, the debt has blown past $38.4 trillion. It is climbing by over $8 billion every single day. Interest payments alone are on track to exceed $1 trillion per year. This is the number that makes a future financial reset feel less like a theory and more like a mathematical necessity. And this is where the story pivots from market analysis to outright speculation. The core of the theory is this: powerful financial players aren't just riding this wave, they created it, engineering a gold explosion to deliberately trigger a financial reset. The idea went mainstream after a late 2025 claim from Anton Kobyakov, an advisor to Vladimir Putin. He alleged the U.S. had a plan to shift its staggering national debt into a crypto cloud of USD-backed stablecoins and then devalue them to start from scratch. While this remains an unverified allegation from a geopolitical rival, The idea of a monetary reset to deal with unpayable debt is a well-worn page from the history books. A massive, coordinated wealth transfer hiding in plain sight? It sounds extraordinary. And extraordinary claims require extraordinary caution. The theory suggests a two-phase plan. Phase 1, let gold run wild, revaluing it upwards and making the U.S. government's own gold reserves suddenly worth trillions more. Phase 2 is the clandestine part. Sell gold at its peak and rotate that wealth from the old safe haven asset into the new one, the crypto ecosystem. While the world is distracted by the glittering prize of gold, the U.S. has been quietly establishing the regulatory groundwork for stablecoins, effectively creating a petrodollar 2.0. Theorists point to strange circumstantial evidence. In January 2026, Christopher Wood of Jefferies publicly announced he was dumping his Bitcoin allocation for gold, blaming the long-term threat of quantum computing. An analyst reallocating funds based on a technology that might be decades away is, to say the least, unusual. Was this a public signal? A head fake designed to boost gold right before the real play into crypto? If this theory holds any water, it positions crypto not as a rival to gold, but as the designated heir to a dethroned dollar. The question is no longer if a major shift in the global financial order will happen, but when and how. What do you think is the real driver behind gold's meteoric rise? Is it a straightforward case of geopolitics, or are we witnessing the opening moves of a much larger and more calculated game? Share your analysis in the comments below. And if you want to stay ahead of these seismic financial shifts, make sure you subscribe and hit the notification bell. So, is there a coordinated strategy to crash the dollar? The theory that institutional players are pumping gold only to dump it for crypto remains just that, a theory. There is no smoking gun. The visible forces, trade tensions, a weakening dollar, and massive central bank buying, are powerful enough on their own to explain the chaos. But to dismiss the underlying premise would be a mistake. The real story may not be a covert plot, but it is a financial war being fought out in the open. De-Dollarization. Nations like China and Russia are actively building parallel systems to trade completely outside the dollar, shielding themselves from U.S. sanctions. The rising share of gold in global central bank reserves is an unmistakable signal that nations are hedging their bets against the dollar. The Greenland situation is the perfect motive. When one country can threaten the economies of its allies with the stroke of a pen, it gives the rest of the world a powerful incentive to find an alternative. In this light, gold's rally isn't a plot to crash the dollar. It is a symptom that the dollar's very foundation is already cracking. This war isn't secret. It's happening right in front of us. The combatants are not shadowy groups, but sovereign nations, and the battlefield is the global monetary system itself. The era of the dollar's uncontested reign is ending. The only question is whether the transition will be orderly or chaotic.